Hey everyone, what an absolutely incredible day this has been for XRP holders. If you're watching this right now, you've probably already seen the charts. And wow, what a sight they are. XRP is absolutely dominating today, sitting pretty as the number one performer out of all the top 10 coins by market cap. We're talking about a solid 5% gain over the last 24 hours, while most other coins are just, well, they're basically treading water, or maybe squeaking out a measly 1 to 2%. Now, I've got some massive news to share about XRP specifically, and trust me, there's so much good stuff to unpack there that I'm actually dedicating an entire separate video to it. You're definitely going to want to stick around for that one. But today we're diving deep into what's happening in the market right now. I'm going to share insights from 8 different XRP chart analysts, and get this, one of them is calling for XRP to hit $15. They're saying this could be the final expansion phase. Translation? The best is yet to come, folks. And here's the beautiful part. All of this is happening on a day when the macros are playing absolutely perfectly. We're seeing new all-time highs left and right, major confluence everywhere you look. This is literally textbook stuff. Exactly what you'd want to see if we're heading toward that final parabolic blow-off top that crypto is famous for. And let's be real here. Historically speaking, this is totally normal behavior for crypto. If we don't see that crazy face-melting rally for altcoins to cap off this cycle, then this time really would be different. But those are some famous last words right there. Think about it. We've seen this pattern play out at the peak of every single cycle for over 16 years now in crypto. It would be absolutely insane for that pattern to just not happen. For humans to suddenly start displaying completely different market behavior than they ever have before? Yeah, I'm not buying it. But here's what's really interesting. The market is still in fear mode right now. There are so many people who are scared despite everything that just happened today. I mean, maybe we'll start seeing that sentiment shift after today's action, but we'll have to wait and see. Now look, I want to be completely transparent with you guys. I don't know for sure what's going to happen. Of course I don't. I'm just a guy on the internet sharing my opinion because, honestly, I love talking about this stuff with you all. I'm definitely in the camp that believes we're absolutely going to see one final rally to the upside. That said, I do follow and respect several analysts who are warning that we might see a short-term dip before that rally kicks in. Now, most of the analysts I follow don't think that's likely, but even the ones who do are still saying, yeah, you might see a pullback, but we're still going higher overall. There's only one analyst I follow who's taking the contrarian view, saying we're almost certainly entering a bear market. But that's just one voice among many. So here we are, Friday, October 24th, 2025. XRP is sitting at $2.51. Bitcoin is absolutely crushing it at $110,931. And speaking of what got the market moving today, we got some fantastic news from CNBC with this headline. Inflation rate hit 3% in September, lower than expected, long-awaited CPI report shows. Let me break down the key points for you because this stuff matters. The Consumer Price Index showed just a 0.3% increase for the month, which puts our annual inflation rate at 3%. And both of those numbers came in lower than what everyone was expecting. The market absolutely loves this kind of news. And here's the cherry on top. When you exclude food and energy, the core CPI showed a 2% monthly gain with an annual rate also at 3%, which was less than forecasted. This is exactly the kind of data that gets markets excited, and you can see it playing out in real time with today's price action. Now, here's something really interesting about how we even got this data. The Bureau of Labor Statistics only released it because the Social Security Administration uses it as their benchmark for cost of living adjustments and benefit checks. See, with the government shutdown happening right now, they've basically suspended all data compilation. This inflation report, it's literally the only reason we got it. And speaking of the shutdown, I suspect this whole thing is going to wrap up sooner rather than later. Here's the thing most people don't realize. When they say government shutdown, it's actually kind of misleading. Most of the government stays open. Yeah, certain things shut down like national parks, and some people do get furloughed, which absolutely sucks if you're one of them. But the government keeps running. They'll pause stuff like regular reporting. The SEC goes dark. So you won't see approvals for things like an XRP ETF, for example. I'm not saying there are zero consequences, but it's largely performative theater. This happens roughly every 2 years on average. Funding comes back, deals get worked out. It always does. Just sit tight a little longer. This is getting resolved. Here's some exciting news from the CABE's letter. Breaking, the odds of 2 more interest rate cuts in 2025 surged to a record high 85%. As the data blackout continues, labor market deteriorates, and CPI comes in cooler than expected, the Fed must cut rates. There is no other option. They shared this alongside a post from Kalshi, a betting market that said, breaking, odds of 3 rate cuts in 2025 reach an all-time high of 85%. Now, whether that's right or wrong, the market absolutely loves this news. We should be getting another cut this month and then another one in December. Quick note, there's no FOMC meeting in November, so no opportunity for a rate cut that month. And here's another amazing update from the Cabe's letter. Breaking. Love to see this. The S&P 500 officially breaks above 6,800 for the first time in history, now up over 40% since the April 2025 bottom. The S&P 500 has now added $17 trillion of market cap in 6 months. Folks, that is absolutely massive. That's a huge move for the S&P 500. Legacy finance up 40% in about half a year. Now, to be fair, that's from what I believe was the April 7th bottom, and that crash happened because of the tariff scare. But like I said back then, love him or hate him, President Trump used that scare tactic as exactly that, a scare tactic. It's a classic negotiating move. There was never a world where he was going to tariff everyone into oblivion. He comes out swinging hard right out of the gates, then he negotiates and then settles into a much more rational position. That's his consistent playbook. That's exactly why when we had that massive crash a couple weeks ago, the biggest liquidation in crypto history at $20 billion, and markets absolutely plummeted. I told you guys, look, the crypto market did what it did, but this is ridiculous and people clearly haven't learned. Now, granted, that crash was primarily driven by leverage, but still, yeah, there were stop losses cascading down, and then you had people panic selling on top of that. I kept saying, do people not learn? He's just posturing here. Just wait it out. There's going to be some sort of deal worked out. There was never going to be a 100% tariff on China on top of what we already have. That's what was initially reported, and I kept saying, it's not happening, folks. It's just not happening. But here's what's even more important. The Russell 2000 went up today. And this matters big time because that's small cap stocks. You know what happens historically when the Russell 2000 truly breaks out, right? That's when alt season kicks into high gear. We got a new all-time high today, not just for the S&P 500, but also for the Russell 2000. Now, we haven't seen a full breakout yet, so we need to see this continue, but this is an incredibly good sign. I'm so happy to see this because it shows an increased appetite for risk-on behavior. And specifically, people are willing to go further out on the risk curve. When people are happy to go so far out on the risk curve that they're buying small cap stocks, that's exactly when they develop an appetite for altcoins, including XRP. That's why this matters so much. There's a real correlation here, and it's because it's the same type of investor buying these assets. That's exactly why I'm excited about this. Now, here's something really interesting. There was a post from someone named Joe Burnett who wrote, "What if it's all about the business cycle?" And the business cycle is this metric that has correlated perfectly, at least historically up to this point, with the peak of Bitcoin and the entire crypto asset class. Here's the thing, though. We haven't seen the business cycle metric flip to the upside yet. Julian Bid, who's posting the chart you're seeing on screen right now, along with Raul Pal, TechDev, and a few others, are arguing something fascinating. We're seeing a lengthening cycle. They're saying that debt refinancing has changed from 4 years, which is what caused the traditional 4-year crypto cycle. And it's now switched to 5 years thanks to everything that happened during the pandemic. It's pushed that timeline out further. Because of that, they're arguing you're going to see the business cycle peak in 2026. And that's why they believe you're going to see Bitcoin, and thus the entire crypto market, peak in 2026. That's their thesis, and we'll see if they're right. But here's what's undeniable. The correlation absolutely exists. What you're looking at here is the ISM. That's the business cycle measurement. This chart goes all the way back to 1998, showing the correlation with the Russell 2000 small cap stocks. We're talking about 27 years of data here. You can see it clear as day, right? That correlation is real. 27 years worth of data, that's not a fluke. And we know that when the Russell 2000 starts moving, altcoins start moving too. So unless you think the business cycle is suddenly going to behave completely differently than it has for nearly 3 decades, I mean, it would be very peculiar if this pattern just broke now. That's why I find the thesis from Julian Bid, Raul Pal, and TechDev so compelling. Now, I don't know for sure if they're right, and honestly, they don't either. But they're sharing their conviction with us, what they think is most probable, and I think that's totally fair. It makes sense when you think about it. This is what's been causing the timing we've been seeing all along. Here's the key insight. If this cycle spills into 2026, it's not This time is different. It's actually the exact same thing, because it's the business cycle and global liquidity that you need to watch to figure out when this thing is likely to peak. So if we peak in 2026 instead of 2025, the timing might be different compared to previous cycles. But what causes that timing? That's what really matters. The factors driving the timing aren't different at all. There are specific things that cause the timing to be what it is, and those fundamental drivers haven't changed. Julian Bid kept it simple when responding to Joe Burnett's question, what if it's all about the business cycle? He just wrote, it is. And honestly, the data is pretty hard to dispute. Now check this out. Here's a post from Ryan Dietrich, who's the chief market strategist at Carson Group. He's sharing some fascinating data about the S&P 500 that shows the average performance after a 20% gain year, which we had last year. The S&P 500 was up about 23% in 2024. That doesn't happen super frequently, but it did. So what Ryan's showing us is the average S&P 500 performance the year after you get a 20% gain. That's exactly where we are right now. Ryan wrote, quietness is perfectly normal after a 20% year. This is one reason we remained overweight equities when others were telling you a recession was coming. What is also common? A big end-of-year rally starting right about now. And if you're looking at the chart on screen, you can see exactly why he's talking about that. This point where I'm highlighting, that's the end of October. Look how it just rockets up from there. It's incredibly obvious if you have even one functioning eyeball. And this data goes all the way back to 1950. So here's my question. If the S&P 500 is likely to go up, why would you think the crypto market has peaked? Now, we don't know for sure that's going to happen, but it's all about the probability of outcomes. History has this amazing way of rhyming with itself. When people are put in situations similar to past situations, they've got the same DNA, the same behavioral tendencies. With a large enough sample size, they tend to do roughly the same thing. So if you just bet in that general direction, you're mostly going to be right. When you spot instances that are very similar to past instances, it's totally reasonable to speculate that what's probable, though not certain, is that you're going to get the same or similar outcome. So yeah, I'm betting we're going to see this thing rally. I absolutely do not think we've hit the peak yet. Now, we will hit a peak at some point. I'm not a permabull here. At some point, it's going to make sense to be concerned. Things will get overheated, and there will be all sorts of metrics showing the market is flipping into dangerous territory where you need to start feeling queasy about the data. But we're not there yet. I just haven't seen those warning signs. And if you look at CoinMarketCap, they track 30 different metrics that are top crypto cycle indicators. Zero out of 30 of those metrics have flipped. So what? Do they just not work anymore? They worked perfectly in all the other cycles, but now they suddenly don't work. Because reasons? Oh, okay. Yeah, I don't think so. I don't find that to be the most probable outcome here. Here's another great post from Ryan Dietrich that really puts things in perspective. 2 Fridays ago, stocks fell 3% on talks that Trump and Xi, that's the Chinese president, of course, wouldn't meet. Last Friday, the VYX soared to nearly 29 on fears about cockroaches, BDCs, and regional banks. October's job is to scare investors out of their positions before the year-end rally. Mission accomplished. And he's absolutely right about that. The market is fearful despite everything we just talked about. Think about this for a second. How often do you see the market absolutely rampaging up to all-time highs while people are still in fear mode? How frequently does that happen? Well, not usually. Certainly not usually. So does it make sense to be fearful here? I don't think so, but the market definitely is. We'll see how this plays out. But here's what's really important. This is not how peaks form. At the peak of every other market cycle, even if you're just talking about crypto, it's absolutely euphoric. The top happens when everybody thinks it'll never stop going up, not when everybody's scared out of their minds. It just doesn't make any sense. Here's a post from chart analyst Tony C. Farino that caught my attention. Not going to lie, the S&P 500 looks like it's going to turn that blow-off top idea into reality. 7 days left to close like this or better. So here's another analyst basically saying, yeah, we're going to absolutely rip to the upside. Now here's something from on-chain analytics firm Sentiment. And we'll be getting into some XRP specific stuff, so hang with me here. They say, retailers are pessimistic on crypto heading into the weekend. Comparing cryptocurrency discussions on social media containing lower or below, shown in blue or red, versus higher or above. The pattern implies a price rise is more probable because the crowd is a contrarian signal. Yep, that's absolutely the truth, and the market is fearful right now. Here's a post from Charting Guy that really resonated with me. This is so true. I have never seen a bear market where the market gives you so long to get out of your bags near highs. Stocks constantly hit new all-time highs. Top 5 cryptos are one fib level away from price discovery. Bitcoin dominance flipping bearish on higher timeframes. Fed flipping to easing. Those are all excellent points. And if this really were the end, if you look at the data from previous cycles, you can see that when the peak was hit for the crypto market, prices would crater pretty quickly afterward. Things would drop precipitously. So why then, if we're entering a bear market, have we been given months and months and months to get out of our positions? Even if you just look at when Bitcoin hit its most recent all-time high, near $126,000. That was over a month ago now. Why is the market giving us so much time to take profits and get out of our positions? That's never happened before. That's actually quite different from historical patterns. And this is happening at a time when stocks are hitting all-time highs. The top 5 cryptos are basically hinting at price discovery. Bitcoin dominance hasn't even fallen off a cliff yet, but it has in every single previous cycle. The Bitcoin dominance is flipping bearish, which is actually great news even though Bitcoin's price can still go up as that happens. Plus, you've got the Fed easing. Well, we'll see about the actual easing happening beyond rates. But as far as interest rates go, yeah, we already know what's happening there. There's been a rate cut, and there are almost certainly going to be 2 more this year. I just don't buy the argument that we're entering a bear market. I do not buy it. And if I'm wrong, I'm wrong. I'm just a guy on the internet. It's not like my opinion is more important than anyone else's, but this is my channel, so I'm telling you what I genuinely think. And that's exactly what I believe. I just don't think it makes sense to believe we're entering a bear market right now. Here's something absolutely wild from Alex Wasey, a popular chart analyst with 197,000 followers on X. He's showing altcoins priced against Ethereum. That's the others chart. And he says, alts have never been this oversold in crypto history. Look at this chart. He continues, not in 2021, not in 2023, not in 2024. Every time it ends the same, I'm up only. Will this time be different? Well, I don't think so. I think alts are going to absolutely rip to the upside, and XRP is going to be one of the biggest beneficiaries of that environment. That's exactly what I'm expecting. Here's another great post from chart analyst Mustache showing the total 3 chart. That's the crypto asset class excluding Bitcoin and Ethereum. He says, total 3 is holding one of the most important levels ever, and crypto Twitter is behaving as if we were in a bear market. Altcoins equals higher. What you can see in his chart is this crucial line of support that used to be resistance. It's the 2021 all-time high for total 3. It's gone up, come back down to test it as support, and we are above it right now. That's why he's saying this is holding and ultimately going higher. Here's a post from Trident's Crypto Wizard showing the others chart. That's the crypto total market cap excluding the top 10 coins. He says, don't you see, bears? I would consider getting an eye test. We've seen this structure before on others right before a parabolic explosion to the upside. Even the liquidation occurred. Crisis brings opportunity to those who have conviction. Spot on. He's arguing that structurally, what's happening right now is something we've seen in previous cycles. The main rally is coming, and if history is going to rhyme with itself, we absolutely should expect that. Now here's something I love to read. This is from chart analyst Mikey Bull Crypto, showing an XRP/USD chart. He says, XRP is in preparation for the final expansion phase this cycle. The red band target stands at $7, and if it extends, that should be $11 to $15. He's actually one of the more conservative XRP analysts I follow, because he thinks there's a possibility we don't quite hit those extended targets. But he believes there's a very real chance we could hit upwards of $15. Now, I don't make price predictions myself. I never have, and I never will. That's just not my thing because I'm not a chart analyst. There's no point in it for me. But here's what I will say. I have conviction. If I didn't believe XRP was going higher, why would I hold it? You don't need to be a chart expert to believe that. I absolutely believe it's going higher in this market cycle, and I don't think analysts predicting double-digit price action for XRP this cycle are crazy at all. Will it happen? We'll see. I don't know for sure. But the concept is totally reasonable and safely within the realm of reality. Of that, I have absolutely no doubt. Here's something fascinating from chart analyst Ether Nason showing XRP charts. The left side is 2017, the right side is 2025. He says XRP. History doesn't repeat, but it rhymes. After its major trend breakout in 2017, XRP initiated a 2-stage parabolic run. Wave 1 followed by reaccumulation, and then Wave 2. Today, the picture looks surprisingly similar. Some cycles don't just repeat, they are reborn. I've seen so many analysts pointing this out recently, and I'm happy to keep sharing this message on my channel because I've been talking about this for years leading up to this cycle. You don't need to be a chart expert to understand this concept. History rhymes with itself. Look back at 2017. You get that huge move up, then you move sideways in an accumulation and consolidation phase, then you get the final phase. That second major leg up is way more important than the first one in terms of actual dollar increase in price. That's why I keep saying double-digit price action isn't crazy, from 49 cents to $3.65. But even if you just want to consider the first leg peaking at $3.40 in January, that's fine. That's a massive move and it's awesome. But here's the key. In terms of dollar increase, historically the second pump is way bigger. That second wave, we haven't had it yet. So if the first one brought us roughly $3 higher than where we were, what's the second one going to be? $6 higher? 7? 8? Again, I don't know, but none of that is crazy. There's way more than enough money in the world to make that happen. And there should certainly be enough money in the crypto space to make it happen if we're going to have an actual alt season. It would be weird if it didn't happen, frankly. That post I just shared was actually reposted by Chart Nerd, who wrote, XRP is currently in accumulation. Once it breaks, double digits are more than likely. Great outlook. So there's another analyst who agrees. And this is all based on historical precedent. It won't be crazy if this actually comes to pass. Even if we're in an extended cycle and we have to wait a little bit longer through this accumulation phase, okay, that's fine. There's solid rationale for that if you buy into what Raoul Pal, Julian Bid, and TechDev are talking about. They could absolutely be right. It's a reasonable thesis at minimum. Chart Nerd also wrote, XRP must break $2.60 before the race back towards all-time highs can begin. $2.20 remains the support zone. Hopefully we don't dip that low. Of course, if the rest of the market goes down, XRP is probably going with it. But there you go, key levels from Chart Nerd. Here's another post from chart analyst Kripalika. And he's been beating the same drum over and over again. I'm highlighting this because he hasn't changed his perspective, despite everything that's happened recently. He's predicting XRP is going to hit at least $10 this market cycle, $10 plus. Chart analyst Javon Mark says, due to the extreme similarities in XRP's price structure to a previous bull run, $9.90 looks to be up next for the prices to push, and they may not stop there. That's an over 309% increase from here. Buckle up. So he's talking about close to $10 price action too. Now he's one of the analysts comparing our current accumulation range to this much shorter pause in the first run-up in XRP. I'm not a chart analyst myself, but I'm honestly a bit skeptical of that being the proper comparison. I think the better comparison should be after that whole first major leg up, and then you had this 6-month consolidation period. I think that's where we are right now, and then you get one final major pump. If Javon's right, then you're talking about having 2 more legs up after this. I'm skeptical of that being the case, but I'm not afraid to share different perspectives from XRP chart analysts. And to his credit, he's one of the analysts who accurately called XRP breaking out this market cycle. My suspicion is we're more like this 6-month accumulation period back in 2017, before breaking out higher. Then there's this from chart analyst Steph Crypto. The next wave higher for XRP will be epic. You can see he's pointing to a final burst to $10. But based on the structure he's charting here, he's not saying it has to peak at $10. In fact, he's optimistic that XRP could peak over $30 this particular market cycle. So he's definitely on the more bullish side of any analyst I'm willing to follow. Here's chart analyst Ali Martinez. TD sequential flashes a buy signal on XRP. Looks like the rebound is about to begin. More signs of optimism there. And this one's always fun. From chart analyst CW just this morning. XRP liquidated most of its short positions. Yep, that sounds about right. I love this response to it. Someone named X Finance Bull wrote, that's what happens when you bet against utility, burned. YES. Can you imagine betting against one of the most useful cryptocurrencies ever created? What a ridiculous idea. Just by holding spot, you can potentially get life-changing wealth, and people won't just do that. They effectively have gambling problems because that's exactly what shorting is. I view it as basically the same thing. But yeah, the final expansion is coming. Double-digit price action for XRP? Not crazy at all if we get that. I don't find it remotely unreasonable to speculate about. The best is yet ahead, and there's major confluence based on tons of different metrics. I love seeing what's happening on just the macro scale alone. That's why I say even if the handful of analysts I follow who think we're going to see a short-term pullback are correct, that's fine. If that happens, don't be caught off guard, but it's not guaranteed to happen. And it doesn't break the overall structure even if it does, because those same analysts talking about a short-term pullback still think we're going higher overall. Based on historical precedent, that upward move is the most probable outcome anyway. I don't know why you wouldn't think that's more likely.